Good afternoon. Hi, everybody. How's the sound? It's 5 o'clock. Everybody give me a nice hello if you can hear me, and we will get underway. Hey, guys. Hey, Lewis, Mark, Michael, Treese. Anyone else out there typing tonight? Looks like we got a good crowd here. Hey, it's April. Now you're going too fast. All right. Hi, guys. I guarantee you something about tonight's presentation. Absolutely guarantee it. This will be one of the two best presentations of this year. I will assure you of that. It's the second one in the year. Seriously, this is going to be what I would consider one of those one that a lot of people will like. So sometimes I send an email out saying, you may find this boring, just so you know. I think it's very important, but it's going to be boring. This is one of those that I think is good and you will like also because it's very, very technical. There's a wide range of people always coming to these. My seminar students typically attend these because they're supposed to, and people who are brand new attendees trying to figure out if they want to get into trading, or maybe they're waiting for a year or two to get into trading and they're just kind of sticking their toe in the water. There's a lot of newer people. There's a lot of people that are kind of self-taught, a lot of people that are very poorly taught, I hate to say. So I try and do these to provide some good education. I've made it clear always that, there's the free stuff page also you can all go to get a lot of good stuff. It doesn't replace an education, and I don't try to pretend that it does. All of the free services here are an opportunity for you if you want to try to educate yourself, but you have to do that, and that's quite a process. And if not, it's a good way to get warmed up, see if you like it or not. And a lot of people do eventually decide to actually take a seminar from DTS, the seminar program, but that's totally up to you if it's something you want to do in the future. This is going to be a very technical presentation tonight, and I think some of you who are the better trained, well, some of these I think you'll get. I think everybody should. I think everybody should get this tonight. If you don't get this, I think there's a problem. You shouldn't be trading in any way, shape, or form. But I think you'll pick up a few little tips here. And I brought these, this just kind of came to me. I have a list of presentations I'm always going to do next. And this one jumped to the top of the list because I keep getting asked certain questions that I shouldn't be asked. They're just kind of, I don't get why you're asking that. Or, well, I get why you're asking, but if you're trading, you shouldn't be asking that question. So I wanted to cover a few of these because some of these I've actually heard taught incorrectly and everything else. So we're going to go through these. I have 4 questions. I'm going to give you actually a survey quickly on 3 of the questions first, and then I'm going to go through the theoretical concept of each question and then some actual trades like I always try and do to exemplify what it is that I'm showing you. So let's go to the first slide here. You've seen it in the email. So you read that, or you can read it, or you're never going to read it, whatever it is. Here's what I sent out in the email today. This is sent out to you just saying, here's what we're going to specifically talk about once I had all these slides done. Good rules. Never short an uptrend. Now below that are just the counterparts. Below that are just the counterparts. So, there's long, short, uptrend, downtrend. So I have put on the top the bullish concept. Never short an uptrend. Is that a good rule? Always follow. I'll give you the survey in a minute. But of course, the same concept would be never buy a downtrend. It's the same thing, just in reverse. The examples I'm giving are kind of half and half, so we're splitting them up. The questions I'm going to ask you will probably just focus on the bullish side. So never short an uptrend. Never short a stock that is green on the day. Never short a stock that is at the high of the day. Never short a strong stock. Naturally, the flip sides are all those that are right below there. But let me run through each of them real quick, just give you a quick little sketch. I'm going to give you some survey questions here in just a second. And the problem is I'm not sure what order they're in. So let me run through the 3 questions. One of them is going to say, is basically going to ask you, is this a good rule, not a good rule? There's some ABCs as to what it is. But it's going to basically say, if we're in a downtrend, can you go long? Now, we all perhaps define a downtrend differently, but I'm looking at a stock that's falling. It's heading down. Every time it tries to rally, it makes a lower low, it makes a lower high. That's a downtrend. One question is going to be, just so you're very clear what I'm asking, is it okay to go long a downtrend, or when would you? So that's going to be one question. The other 2 are pretty self-explanatory. Never short a stock that's green on the day. So the day opens, right? And if we head up, the market's green, the stock's green, and is it okay to short if the market is green on the day, meaning it's above its open price? There's a green bar on the daily chart. We're up. You listen to the news. We're plus, plus, plus. The Dow, the NASDAQ, they're all up. Is it okay to short the market, or is it okay to short a stock that's up, or is it okay to short a stock if the market's up? And the third one then is never short stock at the high of the day. So we're running up, and here's the stock, it's at the high of the day. Would you ever short that? Okay, so those are quick little diagrams of the questions. Now, I've only used the survey thing once, and I did it successfully, but I did this very quickly at the very last second. So let me see if this works. I'm not all that familiar with it. I didn't do a trial runner. This presentation took a long time for me to do for some reason. I don't know why. There we go. You see that? Scroll down and go ahead and answer whenever you want. Never short a stock that's at the high of the day. I always agree with that statement. It's best to follow that statement. It can be proper to do, meaning to short the stock at the high of the day. It can be proper to do that, shorting at the high of the day. So we have, well, we got a lot of people here. I'm going to have to expand the room because we only hold 100 people in here and we're at 93. To keep answering, everybody, we've got 32% answered, and I'll show you this, 32% answered. 45% answered. Keep it going. If you're driving, there's a little cell phone next to your name. I don't think anybody's driving, so I should have like at least 80 people answering. Come on, let's get up to 60 answering. Come on, give me a few more. The more accurate it is. I'm going to end the voting, and oh, there we go. Share results. Boom, there you go. Got the results there, everybody? Yeah, there you go. Okay, I wasn't sure I could do it that easy. I forgot. Take a glance at them there. Okay. So more than half the answer you can see, and about half said number 3 and half said the other 2. So there we go. Let me go on to the next question. Never short an uptrend or buy a downtrend. It's going to be the same answers for all of these. The answers are the same. I always agree it's best to follow it, or it could be proper to do what it says. In other words, it could be proper to short an uptrend. If you agree with, you should never short an uptrend, the first answer, I always agree. If you basically agree, but maybe once in a while you cheat it, it's best to follow that statement. And if you're a little more of a rebel, I guess you would say it can be proper to do that. Obviously, these are things that I'm picking out that are rules that I have heard at least. Whether or not they're my rules or not, we will decide very shortly. I want to get to about 60 people. We're almost there. And we're getting about the same results here. We got 55 of you voted, about half you voted. Got any more? I'm going to give you a count on 5, 4, 3, 2, 1. Go. We got about the same, actually a little less, 35% saying it can be proper, 23 saying it's best. Got the results there? So 14% I always agree, 24% is best to follow that, and 35% say it can be proper to do. Okay. And the last one, and I wanted to do is just get a sense for myself, kind of. It's not taking very long, and I thought you'd be kind of interested too. So same thing, never short a stock that is green on the day. I always agree with that. And green on the day simply meaning the daily bar would be green. It is above its opening price. It's bullish at the moment. Never short a stock. Is that a good rule to follow? I always agree with that. It's best to follow it. Or it can be proper to short a green bar daily. Van, that is duly noted. Van likes having survey questions with webinars. You know what my next question is, Van? It's a start. My next question I was going to ask was, do you like having survey questions at webinars? Yes or no? But now I don't need to answer because you've already voted yes. All right, here we go. Ending voting. 5, 4, 3, 2, 1, go. It's about. Yeah, surprisingly, a little more of you were lenient and said it could be proper to do. There's the results. So here we had 47%, about half of you said this one could be proper. So you seem to like this deviant rule violation a little bit more. There's your answers. Okay. So let's get back to that, and here we go. So quick little comment here. Some common quotes that go along with these rules. Don't catch a falling knife. You've all heard that one. Trader who picks bottoms ends up with sticky fingers. You probably heard that one too if you've been around trading more than a week or two. Most of these rules apply to any time frame except for the ones that discuss the stock market being green or red for the day. So a couple of these really are things that would apply more to day trading than would be to longer term. But the concepts for the most part are good long term or not long term. So let's take a look at what we have here. Number 1, never buy a downtrend. That's the one I'm going to address first. And this is where about a third of you said you could do this, almost half you, and the other half said never do it, can't do it. So here's what we have. We have a downtrend here. And the question is, would you ever buy that right there? Can you ever go long right there? This is, I think, a fairly basic concept, but I get this question a lot. All the times I'm in the trading room, and I will be buying something like that, and a newer trader or somebody will say, or I'll get a question on the Trade of the Week video. Somebody will say, hey, Paul, you know, you're supposed to follow the trend. You're big on saying follow the trend. And I saw in that video, or I saw yesterday in the room, you went against the trend. You went long in a downtrend. How can you do that, right? Yeah, well, you're still taking a bullish position in a downtrend. It doesn't matter how you do it, Van. It's still a bullish position in a downtrend. It's fine. So once you answer the answer to this question is that it's all relative to what you're talking about. So there's your downtrend, and the bottom line answer is I do this all the time. It is what you do, but it all comes down to semantics here in a sense. But I want you to be very careful with this. I divide up the way I look at things and teach things into two concepts, to strategies and to entries. And strategically, you never would buy a downtrend. That would be correct. But to say you never buy downtrends is incorrect, because all the times you are. Because watch carefully what's going on here. Do you buy this ever? Can you ever go long here? And the answer is yes. That's exactly when you do go long, exactly, Ken, when that is the bigger picture going on, right? If that's the bigger picture, then that is exactly what you do. As a matter of fact, if I were to ask you this question, if you're buying a pullback on a 60-minute chart, what percentage of the time would the 5-minute chart be in a downtrend, everybody? If you're buying a pullback on a weekly chart long term, what percentage of the time will the hourly chart be in a downtrend? What's the answer? Yeah, it's not approximately, it's 100% of the time. It's always going to be the case, right? So anytime you're buying a pullback, you are buying downtrends on some time frame, right? And you know, hey, David, I don't know if you're a new name or a different name, but yep, I throw fibs into what I teach as one little concept to look at, but it's really the congregation, David, of several things, you know, coming together. Location items, and the general loose concept of fibs I agree with because it makes sense. So we get a lot of things coming together, but the point is that whatever you determine to decide to go long on this bigger time frame. So like somebody said, this could very simply be, let me get an arrow here in black, this could be your weekly chart if you're longer term. And this is perhaps even an hourly chart pullback. I go down to the hourly chart a lot of times on a long-term position. This could be your hourly chart. And this is your 5-minute pullback, right? So when you enter on this 60-minute chart, that uptrend, you will be buying downtrends on smaller time frames. Now this gets confusing to some people. And for some of you, this is, I think, the simplest concept of the three I'm going over. So the answer to this is yes, in some situations, buying downtrends is exactly what you do because you're not strategically buying the downtrend. You're using the downtrend for an entry concept because the bigger picture is not downtrending. Does that make sense? Hey, Jay. Jay, I think I have 4 J's here, so I apologize for not remembering which J you are. Send me an email if you haven't talked to me in a while, okay? Send me an email and say hi. All right? So there's number 1. More of a basic, but I get that question a lot, and I shouldn't get a lot. So let's go on to the next concept. Oh, no, I'm sorry. I told you chart examples to back up everything that I teach, because one of the things I emphasize tremendously here at DTS is that what I teach is what I do is what I teach. There is no conflict, there is no distinction. I have the seminar program that I do teach here. It's 3 days, 3 Saturdays. It's also on home study now. It's fairly long, but I could teach 3 times that amount of information if I wanted to. If I want to drag it out, if I wanted to add more seminars to charge people for stuff, which I don't want to do. But all of that is somewhat worthless information. So what I teach is exactly what I use all the time, what you need to make money. Not a lot of useless information that you actually never end up using. There's all kinds of confirming crap out there that really doesn't mean anything. You make your decisions on the proper things, and that's it. Matter of fact, there's a video out there, if you want to see it, in the free stuff page called Confirming What. If you're interested in that topic about how useless some of the confirming indicators are, go watch that video, Confirming What. You need to make your decisions, and it's based partly on charts, partly on math, partly on psychology. So here is an example. This is Amgen. Now, when I give you trade examples, this one actually goes back 1 week. Now, I don't think that's crazy, but I always tell you I try to use trade examples from the last 2, 3, 4 days, because I don't want to go back in time to find some example, because that shouldn't be the case. If I'm telling you that I teach you what I do all the time, right, it should be right there. Now, these are very specific examples. So For this one, I had to go back like four or five trading days. The others are more recent. And it's not because I'm hiding anything. I'm above my goal for the week, so there's nothing wrong. It's just that these are very specific examples. Everybody understand that? So here's a downtrend on Amgen. This is a 5-minute chart, and this is from the 9th. And of course, the question comes up here. We're in a perfect downtrend. Would you short that right there? And the answer is, you're probably going to guess, is, well, this probably brings out the point of this question very well. Would you short that right there? And the actual answer is, you just don't know, right? See, because you don't make your decision from one time frame ever. There's always 4 relevant time frames that you have to involve. Whatever you're trading, I don't care if you're trading a 1-minute chart. Well, if you're trading a 1 minute, there's only 3. But if you're trading anything from a 5-minute to a weekly chart, there's 4 relevant time frames you have to be involved with. But the other side of the question, would you go long there? A lot of people would say, no, that'd be crazy. You wouldn't go long there. But if you pull out the bigger chart, I did go long there. You can see right up there. I went long there, and let me show you why, because this is the hourly chart. There's the hourly chart. Wide range bar, breaking above a long time consolidation, an hourly buy setup forming right there, right? You can see up here, this is the trade from last week. And if you want to look at it for a minute, you can see the numbers in here. Where's my little? So this was entered at 10:30, which is going to be, well, we'll look at it in the 5-minute chart, is probably better. So the hourly chart justifies the strategy. And then what you're really looking for is that 5-minute chart to kind of end its downtrend. When that happens, when that happens, there's a very good chance the hourly chart is kicking in. So that happened right through there. And you can see I ended up going long at just after 10:30 reversal time. Boom. Now this is never a home run trade. It never went very far. You can see it only made just, well, 3/4 of an hour. I mean, it wasn't a waste of time. It was a good trade. But here's my thing. If you buy the low of the day, you can't lose money. If you short the low of the day, you can't lose money. Now, I'm not saying I can always do that, but that should be your goal. Agreed? Okay, here's the next one then. The second question I asked about was, I'm not sure what order we're in, never buy a stock that is red on the day. Now, this is a commonly taught concept. In other words, I have seen this in print. I've heard people say these words, that you never, ever go to short if the market's green or if your stock's green, right? Or you never go long if things are red. Have you guys heard that too? Just from the Cracker Jack box of technical analysis, have you heard that too? If the market's red on the day, stay bearish, right? Now this one here, unlike the last one where it could be semantics, that's just wrong. It's just completely wrong. If somebody says that to you, ask him to explain what that means, and then tell him he or she's an idiot and walk away very politely and go on with your trading. And here is why. There we are. We open. Here's the day break, right? So this is the day trading concept. Here's the day break. We open and we fall. We fall for 60 minutes. We fall for 60 minutes after the open, right? Falling, falling, falling. The green bar at that time, or the bar in the daily chart, whether it's the market or your stock you're looking at, is going to be red. Is that correct, everybody? We open up the high. We're right there. It's going to be a red bar. Is that correct? That's what the daily chart will look like, right? And the question is, could you ever buy that? Well, according to this rule, if the market's red on the day, don't go long anything. If your stock's red, don't go long. But again, it is just a silly rule. It's the kind of rules that I hate in trading because they're taught by idiots and they put a bad name to technical analysis because people follow some of this stuff and it's just wrong and they just don't get it and people don't make money. So this is why. Watch the chart. This is why you do this, and I do this all the time. Can you ever go long here? Yeah, you could go long. What if the chart going into the day is that? Do you see what I did there? There's an hourly uptrend, a 15-minute uptrend, a 5-minute uptrend, whatever time frame you want to be on, I don't care. But the point is, when the day ends, it's like we take a picture, right, of the stock. We just decide to end the day all of a sudden, right? And for no reason at all, we just decide at 4 o'clock, whoop, stocks, you're done. We're going to take a picture of you, right? And the next morning when they open, we take another picture. And you look at that picture, and it's just like when you're at a party and somebody takes a picture of you and you got corn in your teeth or something. You go, no, that's a bad picture. Throw that out. That's what the stock wants to say. That's a bad picture of me. That's not what's really going on. Here's what's really going on. This is what's going on. What difference does it make that we ended the day right there? Do you guys get that? It's the pattern that happens. So there is no such rule that should be in existence that says if the market or stock is red on the day, you don't short or go long or anything like that. It's just a general rule that is silly. The pattern is what matters. The bigger picture, and again, across 4 times frames, is what really matters. Do I have some kind of a chart or a trade that backs that up? I think I do. This is FitBoy. I call it FitBoy. I always have. I called it FitBoy, I think, for about 5 years before I knew it was Fifth Third Bank, so I still call it FitBoy. This was from Friday. In all fairness, I always want to be upfront here. I played this twice that day. The first one lost because I shorted it here. But the second one not only made up for the first one, but the two together made above the day's goal. Just that one trade, and I had several trades that day. So this is a great trade. But when I went to short that there, what do you think the daily bar looked like? That's the 5-minute chart from the 11th. Yeah. The daily chart was not only green, it was quite green, right? Matter of fact, flip through the daily chart real quick. See that little topping tail bar? That's what it looked like at the end of the day. But the time I shorted it, you ready for this? Here's some great patchwork coming in. Watch this. Boom. That's what it looked like at the time I shorted it, right? What would make me do that? Well, because of what I just said. There's a pattern existing out there that says that that is a shortable area. And I don't care if it's green on the day, red, whatever it is. I prefer to short stocks that are green on the day because how else do you make money? If stocks fall from the high of the day to the low of the day, you make money by shorting the high of the day. The key is to find the high of the day in a reasonable way and get it right a reasonable percentage of the time, right? Go back to the 5-minute chart here. Oh, I show that on another chart. I was just going to show the results of not doing that. So short, and this was an all-day walk away. All-day walk away right to the end of the day for the whole target. You can see one target up there. FitBoy, short around 11 o'clock. That's right there. And one target, end of the day, just a little before close. So just took it off just before close. I was gone for the day for the most part for the afternoon, walked back and took it off just before we got into close. 2.5-hour trade. So I mean that's huge. That's a home run. And again, it's because there are times where you do short the high of the day. It depends what it is. I didn't put it in here, but another rule we could talk about, I'm not going to, is do you ever short new all-time highs? And the answer is yeah, you do. New all-time highs, depending upon the chart pattern going into it, can bring in buyers or could bring in sellers. And again, this is one of these silly rules where traders get burned trading. They think if something's going to new all-time highs, they think there's quote-unquote no resistance to the left. No resistance. That's a fallacy. That's not true. They don't understand what resistance actually is. I'm going to show you a chart here in a minute where we're going to get into that same question. So that was number 2, and that was the example number 2. And number 3 is kind of similar, but it's different. Number 3 rule that we voted on was never short a stock that's at the high of the day, or never buy a stock that's at the low of the day. Misprint there. Don't read that. So here we go. We're rallying. We're at the high of the day. Daily bar is very green at the time. Now this is never short a stock at the high of the day. I missed my words there a couple times when I said that, but these are very similar concepts, obviously. So we have a stock here that's at the high of the day. It's running up, running and running up. It's been running all morning, whatever. It's at the high of the day. Could you ever short that? And the answer is yeah, you can. Now, it depends. Sometimes that's the dumbest thing you can do, but sometimes it's not. It depends on what's going on. If that is the pattern, in other words, if you are running into a big recognized resistance area, and that could be a downtrending minor resistance area, it could be some kind of major resistance area on that time frame or time frame higher, whatever it is, that is where it has a better chance of rolling over. Now, not all resistance areas are the same. Some are not that potent. And what's also helpful, well, let me ask you guys a question. If you're running into a resistance area and you're not quite sure how strong of resistance is going to be, what is extremely helpful to make that resistance area work better? What would you like to see in the pattern? Well, I mean, just like on the way up, Peter. I mean, you guys are kind of talking about possible entry criteria, and that's true. Yeah, you guys are all talking about really entry concepts, which is true. But just in general, when you're running up there, what do you want to see? The way we come into it, right? In other words, I'd like to see kind of a big extended run, right? I want to see a big run going up into that area, right? Because it tires out the pattern. You tire out the buyers. It's just like having a a marathon runner, you could never beat a marathon runner running 100 yards, but if the marathon runner just finished a 23-mile run, maybe you could beat him in a 100-yard dash because he's exhausted. So what I don't want to see is if I want to short a pattern like this, I don't want to see a kind of stair step up and rest, stair step up and rest. Then I don't want to short this. Do you see the difference, everybody? Van, take all that crap off your chart immediately right now. I keep, you can keep one thing on your chart as a guide. I keep moving averages on my chart, but they're a guide. They do not work for any of that stuff, period. No discussion about it. So in this particular case, yes, big green bar on the daily chart, shorting into prior highs, absolutely, why not? Because if there's going to be resistance there, that's where we want to short. When are you going to short this if you don't short it at the high of the day? Well, prove to yourself that VWAP is worth anything, then put it on the chart. Seriously, for any indicator, I'm not opposed to giving one thing on your chart if you have a practical purpose to use it. Just don't ever use it. Don't use any technical indicator for a buy or sell indicator because none of them work. Absolutely guarantee you. If you want to have a debate about it, you'll lose as far as actual buy and sell indicators. I keep moving averages for a purpose. They're not buy and sell indicators. They don't mean anything when they cross. They don't mean anything when you gap into the 200, over the 200, run into the 200. None of that means anything. I just keep them for a general concept of being able to understand the trends on my chart because it gives me some parameters to work with. If you have a specific reason like that, it's fine, but they're never buy or sell indicators, never, period. So do we have an example of shorting a stock at the high of the day? You're going to like this example, I think. My goal, I just added their line, my goal every day is to short the high of the day or go low the long of the day, or go long the low of the day. I said it backwards. Sound like I was ordering dinner. Go low, go long the low of the day. Either way, but that's the goal, right? So that is the goal, and it even says here, not only is this not a rule to not follow, but how else do you make money, guys? How else do you make money? I mean, I'm kind of facetious. There are different ways you can make money, and you can just take the middle part of a trend and that type of thing. But the best money is obviously made if you can get in near the low of the day and hold for the better part of the day. Now, there's different styles of trading. I get that, and there's different ways to do it. But you're not always safe waiting until the uptrend begins long because the uptrend could suddenly end, right? Unless you're confident the uptrend has a long ways to go. So there's different styles and different ways of doing things, but you can't discount the fact that buying the low of the day, if you can find it, is the best money maker, period. Do we have an example of that? Here is GT from Friday. The daily chart GT had a bit of an issue the next day. The next day we gapped up and we gapped over the prior afternoon. So what's going to happen here is we're going to gap to about there, which doesn't look like a lot in the daily chart because this is a one-day daily chart. Huge debacle there, obviously. But it gapped, that next morning it gaps enough to gap over everything for a consolidation from noon on the prior day. Now, here's the first question I have for you. This kind of a yes or no, or give me your comments. I'm going to give you a minute while I have a sip of Coca-Cola. Is that a promising looking long because of the void above? We're going to gap over half a day's worth of trading. Is that an interesting long to anybody, or is it an interesting short, or what would you do with a pattern like that? Biggest red bar on the daily chart times 12. And we're gapping over some stuff. So in other words, on the intraday pattern, there's really not going to be, well, not going to be much resistance there. I'll give you guys a second to give me a couple answers there. Okay, keep answering, but let me get a couple things out here. It's not exhaustion at all. This is ignition. This is the first day down on the daily chart. It is not exhaustion, it's ignition, okay? And I think the person who said that should know that because it's the first big red bar. So there is nothing bullish about this whatsoever. It is not a tradable void above. This is one of the biggest misconceptions in trading. As a matter of fact, there is a presentation I did. If you go to the free stuff page, and it's called Voids and Other Confusing Topics, right? And it talks about this exact thing. People have this terrible impression that if you look to the left and you don't see anything, they think that it is a tradable void, and that's completely wrong. This pattern will have more resistance than any chart pattern out there in the country. Why? Because every person who was long in here woke up that next morning, if they're at work, and they're down here. And what do you think they're going to do? Every rally attempt, these people are selling. There is tons of resistance in this pattern. tons of resistance in this pattern. Yet people treat this like a bullish thing because they say, well, there's a void there. I look over here and there's nothing there. I hate to use the word all the time, but that's just an ignorant comment. You don't understand what you're doing. There's tons of resistance there, right? Tons of it. So sell more to more. This to me is only a short watch, and I happen to love these. You get these big breakdown bars, and what happens is first thing in the morning you get dum-dums who think it's a long, so you let them try to go long, and then you come in and you short. So here's a great example. I can't advance the slide. There we go. So we're going to do a 1 minute chart the next morning. This is a top watch for me, right? We run up, get some selling, we run up again, and I shorted just coming off that second high. So here's a brand new high we made. Do you see what we did there? Made a brand new high. Didn't matter. I was shorting it right into that, and then we fell. Now, trade one, you'll see on the next chart. I lowered a stop and got out of it for a very small profit, just made a little bit of money, but then I reshorted under the same concept. Let me show you what happened. So my main point here is, though, that here is a brand new high that fell because the new high was sold into, okay? Hang on, I see a big comment there. Let me finish this thought, and then I'll go back and get it. So there's a new high of the day. And you see, guys, a new high of the day, and it was sold into. Do you understand that? New high, I mean, a new high for, boom, new high. And it was a new high for the past half of yesterday with that quote-unquote tradable void above, which is not a tradable void. So here's the 5 minute chart. So I shorted here. And you see right here, I brought my stop down to there. So I got out at a small profit. But then here I reshorted. And it actually turned out to make more money, I think. I have to redo the math. It made more money reshorting it there. And then it was just the perfect time to do it. But again, this is that chart you saw where you have this huge red bar and people are thinking long. Well, these are dum-dums, 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 and then the real selling takes over and you get to make that money from it. So again, what was the point of this? The point is never short a stock that's the high of the day. Well, not necessarily an accurate rule. It's not a rule. It's chart patterns that matter. The problem with so many traders is that they rely on these cliche lines, these one-word trading concepts, as if you can learn to trade from reading a one-page 10-rule manual or something if you follow that. And it has great intelligent comments in there, things like buy low and sell high. And, you can't go broke taking a profit. It has all those great sayings in there, which most of them are wrong and the other half are worthless. So you have to just get to understand the charts, and it's not hard to understand this stuff. I'm going to send an email out because it just hit me the other day. It's going to be part of a kind of a joke email, but I have now at least 2 and I think 3 people that are part of DDS that are just out of high school. And I also have a tremendous amount of people that start trading when they retire. I mean, we cover the spectrum from one end to the other. It's amazing. I'm getting lots of material from my best applying video. Tell them they're an idiot and walk away. That's an area. Well, you know what? At least ask people why. At least if somebody's telling you something, just keep saying why. Why is that resistance? Why is that a void? Why is it going to go higher? And you know what? The proof is in the charts. Look at the charts. Look at the charts that have huge red bars or big gap downs, right? Now, they're all different. There's some that I say maybe would come back because of the pattern. But the ones that are like that, they're not coming back for a while, very likely. The trend is going to, a move that big, typically, it gets very narrow range days and just slowly continues to bleed lower. It's going to have its attempted pops, but it'll be a long time. It has to go through, if you go back and look at that daily chart, let me pull it up again. It has to go through a process of every time this thing tries to rally over the next week, 2 weeks, 3 weeks, it's going to get hit with selling from all these people. And it has to try to pop. This is what I call the whack-a-mole concept, right? Where the stock, every time it pops, people are selling into it. And it has to pop so many times that it can absorb all the selling from all these people who are sick of being in this stock that's causing them a headache, until one day it pops and there's nobody that wants to sell anymore. And that's going to take a long time. Now, there's a lot of things that go into every chart analysis. You can't just make a blanket statement like I just said. You can't make a blanket statement about any one bar, one pattern and say it's always that way. It depends. For every move that happens on a chart, the goal in technical analysis is to try and understand the best you can the people that want to be long and the people that want to be short. The people that have to be long and the people that have to sell or be short. So that's why you're always balancing all the time. Moment in time, powerful stuff. It is my favorite thing. There's actually a video out there, Glenn, on the free stuff page called A Moment in Time. This was getting to be great when people ask me questions these days because 4.5 years of educational material. I don't need to answer anymore. I just say, go watch this video. Do you enter on a pullback if stock drops or rally without another entry? It happened to me in LUV today. Did you enter on the pullback if the stock just drops or rally with other entry? I'm not sure I understand your question, Loic. Are you saying, like, can you enter a stock without entry criteria sometimes if you're very sure of the area you're entering? Is that what you're trying to say? There's a base and look to buy at the bottom of the day. Well, see, like that's exactly what I mean in terms of you're asking a Cracker Jack box question, meaning you're expecting just a simple question, simple answer. I mean, yes, theoretically that's a concept, but it depends on all kinds of stuff. There are some bottom of bases that are not viable because they shouldn't be bought. It depends what the pattern is overall. And then you get into the whole thing. It depends on your market timing, depends on the bigger pattern of the stock going on, depends on a whole lot of stuff. But yes, in general, buying the bottom of the base is a good concept. Yeah. In other words, Loic, what I was saying a minute ago was I teach strategies and entries separately, so to speak. So you have a strategy that you feel you're buying the bottom of a base. And depending upon how strong you feel that the bottom of the base is a good strategy, there are a variety of different entry concepts that would vary in the requirements to get in, from very little to a lot, depending on how much confirmation you want, depending on how strong you think you feel the bottom of the base will hold. Does that make sense? So if you understand all this stuff and you put it together, that's what makes a good trader. Say, here's a strategy I understand is questionable, I want a more secure entry. Here's a strategy, I love it, I'll take a less secure entry. So you have to have that variable thing in there. Again, if you're learning strategies that have a built-in entry, I don't think they're going to be very successful because they shouldn't. Based on uninformed thinking, it's a good buying opportunity. What about going long at the open for a short scalp trade? But John, why? Why would you want to? It's a good question, John. Don't get me wrong. It's a good question. I get stuff like that all the time. But why would you want to go for this, John, when you can get that? Right? If you have a bias on this, if you don't have a bias on the stock, you shouldn't be trading it. If you have a bearish bias on the stock, you wait to short the best opportunity you can. You don't try to get the small move, right? You can look back at a chart, any chart. It's easy to look back and figure out ways you could make money long or short any second of the day, but that's not the way it works in real time. In real time, you want to get the clean entry, the best move, the best that you can all the time. Now, I don't always get it, of course. Trading is about odds, and I don't always get that. But obviously, I get it fairly often, fairly well. But I do that because I don't try to go for the small little pop there. It's tough to me. Here's the thing, too. Here, John, look at it this way. Was it John? I say this a lot. There's a lot of times the stock will gap up, and I'll say I'm going to wait to short it. And the obvious question is, well, if you know it's going higher, why don't you just go long? Well, here's the thing, John. There's a lot of patterns where I don't know if it'll go higher for 10 seconds or 10 minutes or 2 hours. I can't tell. You're not supposed to know all the time, right? But what I do know is if it rallies to here, that's the end of it. And then it's a great short. Does that make sense? So a lot of times it's not so much a matter of guessing where it's going to go. It's an if-then question all the time. It's if it rallies to here, I know it's a short. Will it rally to there? I don't know. Does that make sense, everybody? Kind of getting a little off topic here, but they're really good questions. Just looking at the candlestick of appearance. Candlesticks are all I look at. Candlesticks are great. A gravestone doji means absolutely nothing. A lot of those names, I mean, that's a good book, Van, on candlesticks. Candlestick Charting Technique book by Nissan. It's a good book, but it's looking at one thing. It's looking at single candlestick patterns, 2, 3 bars. You have to put it together with the rest of the chart. A single gravestone means nothing if it's in the wrong spot. I can show you gravestones in the right spot in a chart, they're going to go higher. It doesn't mean anything, one single candle, right? The only exception to that rule is that there's a 2-bar candlestick pattern that actually is a strategy. It's when you have the bullish or bearish engulfing bar, but it's fairly rare. It's not the easiest thing to do. Mike, let me read this clearly so people who listen to the recording can hear this. Paul, one time I brought up the use of patterns because I like utilizing patterns that obviously repeat themselves over and over on a particular instrument, NQ or ES, the futures he's talking about. And you said patterns mean nothing. Oh, I didn't say that. Oh, yes. You left out a key word, Mike. cookie cutter patterns. Cookie cutter patterns. Patterns is everything. I love patterns. Patterns are great. I'm talking about patterns, though, that you learn from understanding the language of charts, not cookie cutter patterns. Yes, head and shoulders, meaningless concept. Okay, got it, Mike? Cookie cutter patterns. And by the way, there's a whole presentation on cookie cutter patterns. I forgot the name of it, though. Mike, if I ever said that without the word cookie cutter, I'd be shocked. Because no, I would never say that about patterns in general. That's what technoanalysis is, in a sense. It's just finding patterns. But I'm talking about just, I call them the Cracker Jack box patterns, where you look at this one stupid pattern, you're supposed to make your living doing that. Like a head and shoulders pattern is ridiculous. As a matter of fact, a head and shoulders pattern, according to Paul, you would never short a head and shoulders where it says to short it. It's the worst trade in the world. Right. So that's what I mean. People that follow that stuff, and they pick up the book of Cracker Jack cookie cutter patterns, they try to follow it, and then what do they say, Mike? They say, oh, this technical analysis doesn't work. I read all about it, and it just doesn't work. Well, that's because they are, fill in the blank. Where are we? What great string of questions, everybody. Great string of questions. I am actually, that was perfect timing. I stopped for questions because that was actually my last real slide. The last question I had here, we're not done yet, give me just 2 minutes here. The last question was, you never short a strong stock, never buy a weak stock. Well, I don't feel it deserves a new discussion because in a sense, strong, weak, it's kind of just a general broad statement of everything we discussed already, right? Something in the high of day is strong, something comes as strong. It's not really a new concept. It's just a broad statement that covers all the prior slides. So like all the prior slides, it's just a matter of how you define strong or weak. Can you ever short a strong stock? Well, not this kind of strong. Not this kind of strong, no. You never short that kind of strong stock. You short this kind of strong stock. What do I mean by that? I mean, you short this. Isn't that strong? Well, not really, right? So you short strong with a small letter S. So it's all semantics. The difference, here's a question for you, trading tip. The difference between strong and strong is relative to what? I kind of just gave you the answer. The difference between strong and strong is relative to what? I have a couple other important things here before you go. We're not even at 6 o'clock yet. What good timing I have. Exactly, Davis, yeah. The larger pattern, I put the time frame you're trading. No, not volume. Volume, in that sense, volume is irrelevant. Volume has 2 to 3 great purposes, but for some things it's not relevant at all. Again, volume is a very misunderstood thing to me. Yeah, time frame reference, that's a good answer, yeah. But strong is just a relative thing to where you're sitting, what you're looking at, where you're at. On the free stuff page, everybody, I'm not going to pull it up, but at the top there is a new link to a spreadsheet that outlines all of the events, because I know going through them can be daunting. Right now, there's just the name and date of the event, but to that will be added a one-line description of what is there, so that, because even I right now, sometimes I know an event covered something, but I'm not sure what the name is, because a lot of times they pick kind of quirky names for the events, and I'm not sure what they are. So that'll be a great reference source for you. And also, don't forget, there is, to start off, if you're going there, there is the Hall of Fame section as well. There was an email I went out yesterday. The next big thing we're doing, I think, right, is going to be Friday the 25th, is going to be the Introduction to Mastering Technical Analysis class, which you all will be invited to. If you've never been there, I suggest you do come to that. It's a 4.5-hour class. It also kicks off the actual live seminar program for people taking the live seminar program. That's Saturday and the following Saturdays. This next seminar program, there's a hole in the middle. I had a personal engagement the second Saturday, so we're going to get together that first Saturday, skip a Saturday, and then the next 2 Saturdays. But 3 out of 4 Saturdays. It'll start after Friday the 25th. You're all invited to Friday the 25th. If you are not, well, let me just do this real quick. There was a, if you didn't see it, there was an email. The price of the seminar program is going up a little bit after this next one. So the one that's coming on the 25th, after that registration closes, there'll be a small price increase. You got an email about that yesterday. A lot of you who are here, I know I invited some people who were at other presentations. You're not members. If you want to become a DTS member, just go to the homepage. Well, actually, I can put the link in here for you too. All you people that are members, is there any, should people become a member at DTS? Everybody's afraid to all the time. Should people become a member at DTS? It's free. Email's never sold or anything. It just sends you great educational stuff. Yeah, no reason to fear it. I do too. I fear giving my email to anybody all the time. That's just natural, but there's really no reason that you have to fear it. If you want a shortcut, it's all over the home page there. And you just get invites to events like today and some educational emails. And once in a while, you get something that's a little, salesy, but usually not. Thanks, Davis. Oh, cool. Great. We'll be happy to have you, Loke. You've been contributing a lot to these. I remember your name because you always contribute a lot to these. So that'll be great. We'll see you there. Are there any other questions? Mike, I'm sure you contribute a lot. The problem is your name is Mike. I bet you there's 20 Mikes, not kidding, at least 20 Mikes at DTS, so it makes it tough. That's right, my son's name Mike too, so it's a good name, it's a great name. All right, everybody. As always, feel free to get a hold of me by email if you want anything. I hope you enjoyed tonight's presentation. It'll make it to the free stuff page eventually. And next time we get together, all of us, Friday the 25th will be the intro class. We'll see you all there. It's exactly 6 o'clock. I want some credit for a great survey, great timing, starting on time, finishing on time. All right, guys, have a great evening and have a good rest of the week.